Hey guys, Tony here. Good morning. Friday, June 7th. I had a chance to do a first pass on the GameStop Q1 earnings, and I wanted to give you some high-level thoughts. And we'll go through the spreadsheet, and I'm going to point out some key things in case you're trying to decide what you're going to do with your trading on GameStop today. With the official numbers now finally in, we know that the net sales was exactly $882 million. That is just about a 28% decline year over year from Q1 a year ago. SG&A expenses came in at $295.1 million, or 33.5% of net revenue. And that is a substantial increase from what we have been seeing traditionally from GameStop for SG&A as a percentage of revenue. In Q1 a year ago, SG&A as a percentage of revenue was about 28% for the quarter. For the entire year 2023, it was about 25%. And if you guys have been watching my videos, my coverage of the analysis of GameStop, you know that I've been talking to you about the diminishing returns. There reaches a point where your SG&A can't be cut, and if your revenue is falling, then you see that increase of SG&A as a percentage of net sales, and that is certainly something that we pay attention to. This is certainly a slow quarter, Q1 traditionally, and I expect that number to get a little bit better as we stack on some additional quarters throughout the remainder of this year, but we will be keeping track of it nonetheless. And I want you to keep track of it as well. Net loss for the quarter came in at $32.3 million, or negative 11 cents per share, an improvement year over year from last year, which was negative 17 cents. Cash and cash equivalents came in at $1.083 billion, and there was a major change in marketable securities that we need to talk about. Here is the income statement for Q1. We just talked about the key details on that, but the other two things worth pointing out is that the interest income for the quarter was $14.9 million, and the company booked an operating loss of $50.6 million. On the balance sheet, we have cash and cash equivalents at $999 million. That is up from last quarter, which was $921 million. That number went up because there is a decline in the marketable securities. We are seeing marketable securities at $83 million versus $277 million in the previous quarter. So clearly they sold off some of those marketable securities, converted some of it into cash, and then some of it was used to cover the operations. Total decline from last quarter when we add together the cash and the marketable securities came in at minus $115 million. So $115 million burned off the balance sheet. Now we do have that cash raise from a couple weeks ago and the upcoming one that is in progress right now. So next quarter on the current asset side, cash and cash equivalents, we are going to see a much better number here. With that decline at the top of the balance sheet of the cash and marketable securities, we have a total decline in the stockholders' equity of $122 million versus last quarter. Moving over to the cash flow statement so we can translate that net loss on the income statement here at the top, $32 million loss. We need to take out things that weren't cash expenses and make other cash adjustments so we can see what the real loss from operations was for Q1, and it comes out to $109 million loss from operating activities. Here in the middle of the cash flow statement, cash flows from investing activities, we can see that capital expenditures was a little bit lower than they normally spend on CapEx, $4.9 million. Also in the investing activities, highlighted in blue here, is the cash that came in from the sale of those marketable securities, $201 million. And the net effect at the bottom of the cash flow statement, when we add all of this activity for cash, is that the cash on the cash flow statement increased from last quarter, $938 million, to $1.017 billion. Moving over to my spreadsheet, analyzing all the historical data to current data for GameStop, I have highlighted in green here the mix between hardware, software, and collectibles. 57% hardware, 27% software, and 15.5% collectibles. That is on par with what we've seen in recent history for GameStop. The big issue is this number highlighted in pink at the top, $882 million, signifying that continued decline in GameStop's top line revenue. That gives us a gross profit percentage of 27.7%, and that is a healthy improvement over some of the more recent quarters. SG&A here coming in at $295 million, as I mentioned, is an increase in the SG&A as a percentage of net sales, bumping that up, unfortunately, to 33.47%. Net on all of these numbers, we have a operating income of negative $50 million, an improvement over Q1 last year, and a operating margin of negative 5.74%. Earnings per share came in at negative 11 cents, and that also is an improvement over Q1 a year ago. Just to the right, I have 0.01. That is the forecasted earnings per share for the entire year of 2024. Obviously, that number can change, and it could change in a big way if management does something productive with the cash that they raised a couple weeks ago and the cash that they are currently raising. This is the main thing that I'm going to be watching for in GameStop. Can they take this cash and translate it into some profits, some new activity, a merger, an acquisition? I don't know, but I'm going to be watching them to see what they can do to increase profits. And that is literally the best thing that management can do to increase the value per share for each shareholder and to increase this fair value, the financial fundamental calculated value of GameStop. Even with the cash that they're adding to the balance sheet, that's only going to increase the book value a few more dollars. We got to bump up to $650 with the latest cash raise. That's going to be bumped up even more with a couple $2 billion that they're raising right now. And we'll add some more onto that for investor sentiment. I will do all of those calculations once I know that this current cash raise is done. And we'll see if we can identify what the new fair value for GameStop is. And that may be very different than what the trading value is out in the market. Always keep in mind, you have your fair value, and then you have what people are willing to pay at the moment. And I like to get my entry in somewhere between them. Obviously, as a value investor, I'm going to prefer that my entry for a long-term hold be closer to the fair value, but I don't always get that. And this is going to be a developing situation. And we have Roaring Kitty on top of that, getting ready to talk here in just a few minutes. I'm very, very curious what he is going to have to say. Operating cash flow came in at negative $109 million. Free cash flow, negative $115 million. That gives us a free cash flow margin of negative 13%. A little bit of slippage there compared to recent history. I haven't seen the entire 10Q uploaded to SEC Edgar website. Once that is uploaded, I will read through that entire thing and see if there is anything else worth noting. But I wanted to get this quick video out to you today, and maybe, this will be helpful to you as you're trying to decide what to do today. And I hope that, if you're looking for a higher price today, that things turn around after Roaring Kitty's video. We will have to see. I do know that GameStop is actively selling into whatever price action is going on today. So that could act as some tamping down of the price today. And we will just have to play it by ear and see what happens. I wish you the best. If you have questions or comments, drop them for me down below. I am Tony Denaro, and I will see ya on the next video.